Market fails at resistance yesterday. Is the rally over, or is there more to go? That's coming up in today's 3 minutes on Markets and Money. Yesterday, the market sold off a bit after Fed's Bostic came out and basically walked back his statement on potentially a Fed pause by August. That put into some worries into the market, of course, about the Fed being more aggressive in terms of hiking rates, reducing their balance sheet. And of course, that hope for a little bit softer Fed policy is what's really kind of been fueling this market rally here over the last few days. Now, the good news is that we're still on a buy signal here. The MACD is still positively trending right here. We've gone up in those values as well. So that's giving some support and lift to this market. And we've needed that here for a while. But on a short-term basis, markets are back to oversold. So again, this little bit of a consolidation here in the markets and a bit of a sell-off, really not surprising too much. Now, this morning, futures are pointing higher, suggesting we're going to get a little bit of a rally out of the gate. Now, sustainability of that rally is going to be the most important. The bad news, so to speak, in terms of yesterday's action is that yesterday's market failed right at these previous bottoms going back to February of this year, when Russia invaded Ukraine. That initially set that initial low. The markets rallied at that point, retested kind of these bottoms here in early March. Now, that was a little bit higher low here. We got this buy signal in the MACD, and that led to that very strong March rally that we then gave up over the course of the next month or so. Now we're back to this point here. In April, markets consolidated along those previous lows. We took out those lows in early May and then recovered by the end of May back to those lows. But that's where we're stuck right now. That previous resistance here is now holding strong against this market rally. Market needs to rally above this resistance. Now, unfortunately, right above that is going to be the 50-day moving average. So that's going to limit upside here a bit as well. As we continue to try to grind higher, the problem with this is we're going to be eating up these buy signals as we kind of go through this grind process. So upside may be somewhat limited here. I do think downside continues to be limited at the moment because there's so much bearishness in the markets. If you take a look at bearish sentiment, pretty much across the board, still very, very bearish sentiment. That's going to give some lift here as we begin to try to create a short squeeze to get some of these people out of these bearish positions back into the markets. That's why I think there's a little bit more upside. But again, this continues to be a sellable rally as we get into this point. So again, if we can clear this resistance at previous lows, we've got the 50-day coming up right beyond that. I would be selling at that level there as well. And if we can get above that level, if we get above the 50-day, the 200 days running back here at these previous tops. So again, we've got multiple levels of resistance as this market rallies. Each one of those levels, use that to reduce risk, rebalance your portfolio allocation, raise a little bit of cash, and then you can start making decisions about whether or not the market begins to get back into a more bullish trend, or if we're going to see a more bearish outcome later this year or early in 2023. I'm your host, Lance Roberts, for 3 minutes on Markets and Money. See you here next time.